Our next guest says there are three names that have even more room to run. Let's go off the charts with Todd Gordon of TradingAnalysis.com. Hi, Todd.
Hey, Melissa. Let's take a look at three good tech names to start. No surprises, Netflix. In a beautiful uptrend parallel channel in 2018. And what I'm going to do is pull out a little Elliott wave. I think BK will appreciate this. We're going to look at a first push here. And what you're going to do is basically take the distance traveled right there and then project it up in the next ongoing trend wave. You take your Fibonacci multiple, that's going to put you up around 415. I'll spare you the details. But what you're going to notice is that it corresponds with the upper part of that channel. So you've got a collision of technical levels that serves as resistance, but also a target. So I think that's going to push Netflix up through 400. I have this trade on. NVIDIA, I'm also long, not as strong as a chart as Netflix, but similar in that you take net distance traveled in that first push. If you compare that, let me get my line back. That's going to be symmetry, or what they call a measured move. Percent change here is equal to this. That gives you 298 target. That occurs a lot often, a lot more than you think. It also corresponds with that upper channel. So when you get that coincidence of technical levels, it acts as a magnet. So I think NVIDIA's got 300 in the tank. And finally, we'll take a look at Tesla. I've done this chart just a couple weeks ago here in the show. Same one. Beautiful breakout from this long base. We had the first push up, 34% decline. Yields a nice breakout. Then when the fundamentals of Tesla were really being questioned, Elon Musk was being taken to task, all that happened was a very symmetrical 37% decline. So when you look for the size of the corrections, you can kind of set a lot of the noise aside and scoop some really good value. So I do have the Tesla trade on, and I think we're going to continue up to new highs. This is the weekly, and then if we go down to the daily, give you a little bit more view here, get some granularity. You can see I'll do my best downtrend resistance. Keep in mind, this is the daily. We just came from the weekly. We've broken through downtrend resistance. This is the line in the sand. Shorts were caught. Are you going to use that as a synthetic level to buy? Resistance becomes support. And as long as we hold just around this level at about 335, we should be able to clear up towards 400 in Tesla. I like this stock as well. So three good tech names to continue to play this tech rally.
You highlighted in Tesla, Todd, the 30+% drawdowns the past couple of times. Is that typically what the drawdown is? They seem to be sharper and closer together this time around.
Well, we really haven't seen Tesla's been basing for a long period of time, and Tesla likes to show that kind of symmetry or rhythm. Stocks actually do trade with rhythm, and when you find a stock that's really well trading, you're going to see that it does show common, percent moves, and you can use that to kind of time your fundamental entry. Tesla's been range bound for a long period of time, and we're finally getting that good base, that good push up. So next time we do see a pullback, maybe from the 400 or 500 level, maybe again look for that 30% decline.
All right, Todd, thank you. Todd Gordon, TradingAnalysis.com. Which of these three picks, Guy, would you buy?
Well, that's three of my faves, as you know.
Really?
But forced to choose, would you rather?
Would you rather?
I think out of the three of those, Netflix to me still has the most upside. I know it's preposterous to say at $392, but they report, I think, the middle of July, and I don't know what's going to stop them along the way. By the way, and I'll say it again, I think all this, Comcast, it's all about Hulu, in my opinion. Yeah, there are other things, I get it, but it's all about Hulu. It's all about competing with Netflix, and this just gives Netflix that much more of a lead, in my opinion, which is why I think it continues to go higher.
I completely agree with that. I mean, I love NVIDIA. I think that stock actually will do well. But Netflix is the clear winner, in my opinion, of these three. I still think there's a lot of momentum there. I mean, Reed Hastings has done an excellent job from a sub-beat expectation game, playing that game. And I think that continues for a long time. They still have a tremendous amount of growth in international markets, and they are an original content owner. There's
Netflix
no one that can
fan club right now. So
yeah, please. And I'm the guy that's been wrong about this while these guys could gloat, do their victory laps.
Gloating?
Guy's got his moat, all this and that. Bottom line, this is a company that has doubled since December. Okay, are you telling me that the world has changed that much, that this company really should be trading at that much of a premium? And what you guys are doing is basically equating distribution with everything. Suddenly, how about when we were waiting for Netflix to actually come up with some content? So they've won a couple Emmys. Do you think they really have the same content as the other two guys that are competing right now to get bigger? They're not even close.
But do you
turn on Netflix and have everything you want? Absolutely not.
But Twitter's up 180%.
I mean, it's ridiculous.
In the last 12 months.
And the valuation's ridiculous. And I don't think there is a moat. But, I've been wrong for $300.
Look at Twitter. You said Twitter's a buy, but that's what you're saying, not me. But it's up 180% in the last 12 months. So, I mean, I look at it and say, look at Netflix. I agree the performance has been stellar. I just think the trajectory continues for very obvious reasons of why a growth manager will continue to own and buy the stock.
So for me, it's NVIDIA. It's a name that we own for the ETF, and that's because it supports the Ethereum mining ecosystem. And so we'll talk a little bit about cryptocurrencies later, but the price of Ethereum go up generally means that you're going to sell more miners. It's, it's a small portion of NVIDIA's business. But what I also like about it is there's demand from other places in there, right? So it doesn't necessarily rely just on one industry.
AI,
Auto, AI, gaming, all of these things, right? So you have multiple different demand drivers in this space.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.